Good day and welcome to Asset TV. We are at the Prescient Investment Management Infrastructure Conference in Johannesburg. My name is Zama Zulu Zulu. I am now joined by Michelle Green, who is a credit analyst and the chairperson of the ESG committee at Prescient Investment Management. Michelle, welcome. Lovely to see you.
Thanks so much.
And congratulations on a great conference. I think it went well in general. Good conversations.
Thank you, indeed.
Right, so now Michelle, as a credit analyst, can you just please share with us some of the key features that you would take into account when evaluating or analyzing unlisted projects for infrastructure investing?
Thanks so much for having me. So it's a very important question because being in the credit space, and typically these investments are debt funded, the key question is to understand whether these borrowers will be able to pay us back. And one way in doing that is actually to drill down as part of the due diligence, understanding the financials, how healthy is the financials, looking at from a capital perspective, how strong that is, because ultimately that will determine how an entity is able to weather the storm through any events. So is there equity in the business? Is it asset rich? This gives us all indications of how the business is positioned, and importantly also ultimately to understand the cash flows. So understanding what is the revenue drivers, understanding that business model, when is cash actually going to come in, and this is all important because cash is king, right? And that ultimately it will help us understand will they be able to pay us back. So in assessing risk, and particularly in this sector, you want to understand what are the key elements and who are the dependencies. For example, is the underlying contracts, for example, in these infrastructure opportunities. That all hinges on the cash flows, again, coming back to that. But the important part is, now that we know the risks, how can we mitigate it? So is it a matter of taking security in the form of the building, maybe partake in the share? It's all a way in which we as investors that has a fiduciary duty to capital preserve and protect our clients' money, so that when we go into these investments, we know that we are being fairly compensated for the risk that we are taking on. So it's ultimately to look at it holistically, and also looking at ESG. Let's not forget ESG, which is also very important. We've learned the lessons that governance is very important, and not having the proper reporting structures, it leads to not being accountable. So it's important to have the right board, the competent people to drive the ship. And also, I mean, we've seen in the past that these credit events is a breakdown of because of ESG not being implemented. So it does have financial implications. It is a consideration, but ultimately, if done right, these infrastructure investments can offer us very lucrative returns and can have a positive impact as well.
Oh, fantastic. Yeah, and I suppose that ties in with your theme for this year's conference of accelerating growth.
Yes.
Fabulous. Thank you so much for your time, Michelle, and sharing your insights. Thank you so much for your time. And that was Michelle Green, a credit analyst and chairperson of the ESG committee at Prescient Investment Management.